The sun's shining bright on solar. First Solar in particular. The share soared after the company reported earnings and sales that both beat expectations.
They absolutely crushed those numbers last night. The earnings, the revenue, all of these numbers just through the stratosphere.
This is not about putting shingles on people's homes, one house at a time. This is a wholesale shift, and it's not going to stop.
As the price of oil has been annihilated over the last year, the renewable energy stocks have been laid to waste. Because when old school fossil fuels get cheaper, well, that means renewables like wind or solar become less competitive. In fact, most solar stocks are now really just a couple of points off their 52-week lows. But there's one exception. That exception has managed to hold up a lot better than the others. I'm talking about First Solar, and that's symbol FSLR. Admittedly, here's a stock that's down more than 25% over the last 12 months. However, earlier this month, First Solar reported a phenomenal quarter, and the stock has managed to rebound like crazy. 2 weeks ago exactly, First Solar delivered amazing results. I mean, probably the best surprise of 2015. 93 cents of earnings. Wall Street was looking for 36 cents, massively higher than anticipated revenues. All this is thanks to strong sales and powerful cost savings efforts. Plus, First Solar's backlog is so big that they're basically sold out through the first half of 2016. No wonder the stock vaulted 16% the next day, 44 to 51. Oh, and let's not forget that First Solar has launched a yield co in partnership with SunPower, something we talked about endlessly that we wanted. This company is called 8.3 Energy Partners, and it came public in June with the idea being that this vehicle can own many of the solar projects that First Solar builds and pass on the long-term profits to shareholders via a nice dividend. So is it safe to circle back to First Solar with oil once again crawling along the bottom in the low 40s? Let's check in with Jim Hughes, the CEO of First Solar, to learn more about the quarter and where his company's headed. Mr. Hughes, welcome back to Mad Money. Good to see you, Jim.
Good to see you.
Have a seat. Now, your company, when I look at it, is all about trying to figure out how much electricity you can get out of a particular piece of material. And you keep breaking records. What does that mean for the customer?
Well, what it means for the customer is that for every panel that they purchase, they get more energy out of that panel. It means that they can get more energy out of a smaller footprint and get more energy at lower cost. If you go back to the first time I appeared on your program, it was after our Analyst Day in 2013.
Yeah, remember that, Pop?
Yeah, and it was shortly after we'd committed to an aggressive technology roadmap. And there was lots of skeptics, if you'll remember back then, as to whether we would deliver on that roadmap. Well, all we've done for the last 2 years is continue to deliver exactly what we said we were going to. And we're not done. We've got new records that will flow through to our production line over the next several years, the same way we did starting in 2012, 2013. So we start at the core of the company with a commitment to the technology, and then we try to integrate beyond that and capture all of the profit pools.
As much as a technology company you are, though, there are a lot of financial players who are interested. And this morning, SunEdison and Goldman Sachs, $1 billion clean power fund. We're going to talk about 8.3 in a second, but what is the interest of Wall Street? Why is Wall Street so aligned with solar?
Well, so solar's moving from a niche technology to the mainstream of the energy world. And as you well know, the energy world is very capital intensive.
Right.
It requires lots and lots of capital from lots of different sources. And so Wall Street simply is going where the need is. And as solar becomes a mainstream generator, there's going to be need for lots of capital. And we're seeing all sorts of innovative structures and innovative ways to source that capital, including the yield coast, which you've mentioned, the facility that SunEdison is doing, which is a warehouse facility to finance their development. And we'll continue to see that innovation and development as renewables and solar in particular continue to grow in scope and scale.
So something like SunEdison, we could be reading about First Solar and Morgan Stanley or JP Morgan. I mean, it's not done.
It's not done. We don't have the same need they do. We have a rather massive balance sheet, so we don't need the warehouse type facilities, but we will continue to innovate on the capital side, as will all of the rest of the players in the industry.
Okay, so 8.3 is your yield co. By the way, that is the amount of time it takes for the sun rays to be able to hit the earth. So you had to do a little work on that. But if an investor's watching the show and they want to be in something good for environment, which people care tremendously about, First Solar versus 8.3. What are the options? Why would one pick one over the other?
So it's the best analogy I can give you. It's the difference between an exploration and production company and a related MLP.
I was going to say, it seems very MLP.
So, you know, we're in the manufacturing business and we're in the project development business. Those, while those businesses are very lucrative and are attractive to some investors, they're a little more risk-oriented than the cash flows off of an established project. And they have very different costs of capital. And so if you're looking for MLP type, rock solid, stable cash flows with growth that goes along with that, then the YieldCo 8.3 is the vehicle you would want to invest in. If you want a little more of a bet on the global economy and growth and renewables becoming a greater contributor overall, then you're going to look more at the parent companies.
Now, we talked about that, the percentage there, percentage on 8.3, get about a 5% yield, north of 5% yield. But we talked about this notion of how much of the energy is converted. I was trying to compare to, if you looked at the new methane rules that the president wants, you're more energy efficient than what nat gas could be, all in, including the environmental cost of nat gas already, right?
Yes, that's correct. So as you well know, costs have been plummeting and they continue to plummet. And so whereas 2 or 3 years ago when I sat in this studio and spoke with you, we would have been talking about 7-8 cent per kilowatt hour prices in North America for solar power. We're now talking at times sub 4 and regularly between 4 and 5 or just above 5. So when you get to those types of prices, and remember one key component that people lose sight of, when I sign a contract with a utility, I'm giving them a flat energy price with no commodity price risk for 25 years. Go try to hedge that in the market, there's a tremendous cost to lay off that commodity price risk.
Now, but we have talked about the idea of where you are in the country and in the world. I mean, your product works better in some areas than others, depending upon the weather. So where is it not economic and where could it be economic?
So obviously, when you get into sunnier climes, hotter temperatures, that's where you get the greatest economics. What's happened is as the costs come down, the footprint where we're economic continues to expand. So if you visualize the United States, it's moved from primarily the Southwest to now we're heavily involved in the southeastern United States, and as costs continue to come down, that line will move north.
Well, this is the most exciting story to many of the people who watch the show. I'm really terrific that you've been with us the whole way, and everything you've promised and more so has occurred. So thank you so much to Jim Hughes, the CEO of First Solar. By the way, this is an incredibly transparent company. Everything you need is in all the documents, including some fantastic decks that give you all the data you need. Mad Money's back after the break.